Our core value and business model at Trust Funding Association focus on the protection of the assets of our investors. We pledge to use Trust Funding Platform to analyze business feasibility of ICO and crowdfunding in the rapidly growing virtual currency and to monitor and review the distribution of the new coins. In addition, we will enable our investors to anticipate profits as well as protect their assets by sharing select information with the investors. Furthermore, the investors will not only be able to preserve parts of their invested assets through trust funding insurance, even in case of fraud, but also enjoy a wider scope of benefits simply by joining the TFC Holder Club. By executing MOU in the technological sales perspective with the coin companies newly emerging in the virtual money market, we at Trust Funding Association will screen companies for fraud potentials during the initial phase and promote and register only companies with significant business potentials at the Trust Funding Platform. We will provide insurance to the investors through Trust Funding Insurance, and by operating the Holder Club of Trust Funding Coin, we will enable the investors who join the club to receive dividends of the new coins as well as to have a higher insurance rate applied when the investment is carried out. In sum, our objectives at Trust Funding Association are to allow the investors to create profits while receiving protection. The protection of investors is the core value at TFA. What is ICO? ICO is the acronym of Initial Coin Offering. This is the event also known as crowd sale, in which a company that developed the cryptocurrency offers it to the public for funding purposes. In general, certain quantities of encrypted token are released to the public during ICO. If investors interested in the encrypted token purchase them by paying bitcoins and other cryptocurrency, the company procures the fund with which they can achieve continued growth, and the investors become entitled to the equity share in the tokens. Typically, the company conducting ICO allows the investors to purchase the coins at a discounted price during pre-ICO and ICO. For this reason, if investors evaluate certain coins to have good prospect and business feasibility, they can anticipate a larger profit by aggressively investing earlier. Problems in ICO market. As the ICO market becomes more popular, a larger number of companies are participating in this market as a financial method. However, different countries and corporations have different viewpoints regarding the approaches to ICO and cryptocurrency. The fundamental problem derives from the fact that there is no uniform regulation for ICO. Separate ICO regulation exists for various countries and local jurisdictions. As such, investors and coin companies are expected to fully understand the applicable regulation in their country or area when participating and executing ICO. Yet another problem is the absence of the universal standards. For instance, Ethereum and Bitcoin process transactions using different back-end technologies. Though this type of diversity can be conducive to the blockchain innovation, it can cause difficulties in resolution of problems caused by the lack of compatibility among the developers. The last problem is the cost. In order to launch cryptocurrency through ICO, the company must be able to execute $250,000 or more. In some cases, the cost is as high as $1 million or more. In addition, a dedicated development team is required to carry out the preliminary definition and development regarding the initial coin platform, as well as electronic wallet and blockchain technology. Finally, marketing, legal, and other operational expenses are required to execute a successful ICO. Problems in crowdfunding market. Although crowdfunding is achieving a substantial growth in volume, The largest problem with the conventional crowdfunding model is that the users who sponsor or participate in the funding campaign are kept from information about the status of their invested project. There is an abundance of other related problems in the current crowdfunding model, which are addressed briefly in the introductory part of this white paper. First, there is a high risk of fraud in ICOs under the current model, with a large number of campaigns grossly miscalculated, more exaggerated in terms of their value and the success prospect. Second, access to crowdfunding projects is increasingly becoming more restricted. Only certain places in the world allow crowdfunding, and different regulations are enforced by different economic agencies. Third, platforms or some crowdfunding institution charge large commission when raising funds. Fourth, even projects known promoted as crowdfunding endeavors are sometimes changed to compensation or loan projects. For instance, a water bottle manufacturer may advertise that it is financing its business via crowdfunding, in which the company sends finished product to the investors. But in reality, the investors may receive money, not products. Crowdfunding can be categorized into contribution, compensation, loan, and profit distribution types. Higher growth rate or crowdfunding projects lead to increasing default rates, which may in turn cause problems regarding investor protection. Introduction to TFA. We at Trust Funding Association will strive to resolve problems in the crowdfunding market. First and foremost, we are planning to focus our capabilities on enhancing reliability by registering and managing only new companies that passed business feasibility review and fraud screening conducted our internal verification team. Trust Funding Platform is the technology platform for the crowdfunding market. This platform is user-friendly and intuitive and is the complete fundraising tool to resolve all problems faced by creators trying to realize their ideas. Unlike other platforms based on crowd participation, investors can quickly participate in funding projects within minutes using Trust Funding Platform, created with our superb technology. Within Trust Funding Association, Trust Funding Insurance will be offered for preservation and protection of the investor assets, which will prevent larger losses by preserving a certain amount of the investment principal in case the invested company turns out to be a fraud. Our team, composed of the crowdfunding experts, will provide everything necessary, such as technological solutions, including smart contracts demanded by the investors, the potential market efforts, advisory services, specialty management services, and others. Moreover, additional profit structures and high compensation ratio of the investment principal are offered for the TFC Holders Club. TFA does not only protect investors through TFI, but it also provides diversified types of utility through TFP. Introduction to Trust Funding Insurance. A very important component, as well as the supreme safety device, TFI is the insurance company for investors funding verified businesses. Of course, although TFA experts conduct 2 audits, verification and evaluation to validate the companies, we prepare for the worst-case scenarios through this mechanism. TFI is applied to all investors without additional charges. 70% of the investment principal is preserved if the crowdfunding project fails, and up to 50% is preserved at the maximum in case of ICO funding fails. However, the insurance is not applied to trust funding. Business structure of ICO or crowdfunding. As for ICO funding, after execution of MOU with the party in charge of the corresponding business in regard of the ICO for the new coin, the agency service is provided for ICO sales and meetup activities for the corresponding coin. The verified company carrying out ICO will be registered at TFP, and when the recruitment of investors is completed, 3% of the funds raised by the offering is to be paid to TFA by ETH and 5% by the coins issued by the company. The 3% paid in ETH will be dispensed for TFP, TFI insurance assets and the cost for management, maintenance and repairs and upgrading. 5% paid in the coins issued by the company will be distributed to the TFC Holders Club. In the case of crowdfunding, investors possess the equity share of the company and can exercise all types of relevant rights as a shareholders, such as participating in all types of company decisions. Investments are made in form of equity share to the business currently under progress or to the new startup companies. The party conducting the ICO sets the project period, as well as the objective amount and interest rate on it or compensation amount. After receiving the prospectus form for the business from the company or individual, the companies, which are screened through the strict process of examination and evaluation by the experts in 2 separate phases, are publicized on our website, while the investors are invited. When the target amount set by the party conducting ICO is attained, the amount after deducting the 3% TFA commission is paid to the party. This commission is dispensed for TFP, TFI insurance assets and the cost of management, maintenance, repairs, and upgrading. In case the target amount set by the party conducting ICO is not attained, the full investment amount is returned to the investors. Structure of story funding business. Story funding is the platform for sponsoring content creators. Under our system, everybody is allowed to autonomously open projects and produce contents, establish sponsorship period, and the managed target amounts. The final amount raised by the end of the period is paid to the creator after deducting the commission 3% on the 15th of the following month. While the creator can exercise all rights related to the contents, TFA is allowed to amend the contents should the appropriate amendment or restructuring is necessary, depending on the content exposure area on the main screen or the contents do not satisfy the standards. Crowdfunding aims to aid all producers, including artists and musicians, as well as producers of design work, ID products, Internet of Things platforms, and others, helping them find necessary resources and realize their ideas. If the total funds raised is short of the base amount, the full investment amount is returned to the investors without any commissions charged.